Look at my bank statement. Some amount gets credited every single day. It varies from 2 to 5,000, and at the start of the month it hits 15 to 20,000 rupees. This is definitely not my salary. This is my passive income. And the most interesting part of this is that this money continues to come in even when I am sleeping, when I am traveling, and even when I am doing nothing at all. And you can do it too, because honestly, anyone can. Today, I am going to tell you about 10 such assets that will literally earn money for you day and night. Some have risks, some carry no risk, while others involve low or high risk. Some will give you higher returns and others will give lower returns. But for every single asset, I will tell you the exact system and how much to invest. I will show where to do it, what returns to expect, and most importantly, how much risk is involved. I will also provide you with a perfect portfolio allocation, reducing risk so you can basically easily earn money, perhaps even while you sleep. That means a completely foolproof passive income system with a predetermined risk and return system. And yes, there will be no fake promises in this video. The data I will show will be completely verified, and I will even share it with you along with the sources. Because when it comes to money, it's not guesswork but research that works. Let's begin. The very first option is one of the best investment options, where you'll also keep getting both regular rental income and capital appreciation. Here you can start investing with 400 rupees. Put 420 rupees into this property, or invest just 150 rupees in this Delhi mall for a share. Wow, this mall has stores of every big and large international brands. Do you know about their rental incomes? These properties generate monthly rents of 6 lakh, 7 lakh and 18 lakh rupees respectively. Until now, this game was really only for the ultra rich. But now, you can also become a co-owner of these properties. That's with just 400 to 500 rupees by using REITs. In major metro cities like Delhi, Mumbai and Kolkata, you can easily invest in prime properties with just 500 rupees. You can also earn monthly rental income and yearly capital appreciation. It is a completely SEBI-regulated, transparent and affordable investment option. REITs stands for Real Estate Investment Trust, and it is basically a company that owns commercial properties like offices, malls, IT parks, and the rent that comes from them is distributed to investors as 90% of cash flows under the strict SEBI regulations. And these REITs are listed on the stock exchange, meaning you can buy and sell them anytime just like market shares. India has many listed REITs like Embassy Office Parks REIT, whose price is around 450 rupees. Mindspace Business Parks REIT with price around 500 rupees. Brookfield India Real Estate Trust, whose price is around 360 rupees. And Nexus Select Trust is priced at around 160 rupees. Plus, Knowledge Reality Trust is listed, whose price is around 130 rupees. So according to Embassy REIT Investor Presentation, they have actually given their investors a total annual return of 10.5% since their listing. 7.1% via distribution, plus 3.3% capital appreciation. To invest in them, simply go to this mobile app, complete your KYC process, and then search for the name of the REIT you want to invest in. Then you can easily purchase it. It is very simple. But which of these 5 REIT is the best? How much rental yield is each of them offering? Where is their focus? If you want to understand, then you must check out my video on this topic. In it, I have explained in proper detail that which REIT could be the best suited for you. I have put the video's link in the description, and the app through which you can invest in all these REITs, I have also put its link in the description. You can register and start investing with just few thousand rupees. You'll start getting quarterly returns. Once you gain confidence in this strategy, you can do your own research and invest more money to earn a passive income through this. The expected return is a 5 to 6% distribution yield and 3 to 4% capital appreciation. The risk is moderate. The minimum investment can be from 400 to 500 rupees. Next is InvIT. Like REITs, this is a similar instrument that offers an even higher yield. InvITs or Infrastructure Investment Trusts own power transmission lines, toll roads and highways. A key example is the IRB InvIT. This specific InvIT invests in highway projects and collects steady toll income. According to data from Screener and Investing.com, it is giving a distribution yield of 12 to 13%. Yes, you heard that right. A 13% annual yield, while the current market price sits around 60 rupees. If you invest 1 lakh rupees, you will get about 1,650 units. Based on the annual distribution, your total yearly income could be around 13,000 rupees. The investment process is very simple indeed. Download the app from the link in the description, complete your KYC, search for IRB InvIT and buy as many units as you want. Here the risk rating is moderate. The expected return can be a 9 to 13% dividend yield. The minimum investment is 60 rupees. There are many other such InvITs in India and with their name. Projects, their price, yield, and exactly how much total return you can expect from your investment. I've explained all of this in proper detail in this particular video, which has already accumulated a total of 1 million views. I have put the link in the description. Be sure to check it out after this video ends. It will give you a detailed overview, as that also helps you understand the yields of all available InvITs. Next is a portfolio of dividend stocks. In India, there are a number of stocks that consistently pay dividends every year. And this particular dividend yield sometimes reaches up to roughly 7 to 10%. These are the stocks that wealthy people keep in their investment portfolios for passive income. According to Equity Master's January 2025 report, for BSE PSU Index, highest paying dividend stocks include Vedanta, which offers a yield of 7 to 9%. IOC yields 8 to 9%. Coal India has a yield of 6 to 7% and REC Limited has a yield of 5 to 7%. But it is very important to understand one thing here. Vedanta's dividend payout ratio hits 102%. This means it pays more in dividends than its earnings, which is not sustainable long term. That is exactly why smart investors tend to prefer stocks that pay consistent dividends and maintain a very sustainable payout ratio. Coal India is a perfect example here. This company has been paying dividends for 32 consecutive years now. In FY 24-25, it has given a dividend of about Rs 26.50 per share. ITC is also a stable dividend stock. Yields stay low, but the dividends are still regular. Now let me tell you a smart strategy. Look, different stocks pay dividends in different months. But if you got about it strategically and create a portfolio with multiple stocks, you can receive dividends from some stock every single month. Coal India pays dividends in February, August and November. REC pays in March, June plus August and November. Combine 4 or 5 such stocks, creating your monthly dividend calendar. In this investment option, the risk rating can be moderate to high. Anticipate a dividend yield of 5 to 10% alongside potential for capital appreciation. The minimum investment is 500 rupees. By the way, if you want to, you can even strategically increase your 8% dividend yield to 30 to 40%. This way, you can get a dividend of 3 to 4,000 rupees on your 10,000 rupee investment. For a detailed strategy, I have explained all of it in this video. I have put the video's link in the description. Please check it once this video ends. You may wonder why I am referencing so many videos for. The things I am explaining here in 2 minutes for you, I actually already have made a detailed video on them. I have put all their links in the description. Next is senior secured corporate bonds. Fixed income with better returns, where you can earn a fixed return of up to 12% per annum. Look, whenever any company requires funds in order for its business to grow and expand, it puts up its assets as a pledge and then issues bonds. Essentially, it borrows money from the public. This loan can in fact be secured or unsecured. This means if the company fails to repay the loan, the company's assets can be sold to recover the money. When the bond is secured, then the investor will be paid. Wind Wealth offers senior secured bonds with annual returns ranging from 9 to 12%. By investing in them, you get regular interest and at the end of the tenure, you get your principal back as well. Paid directly to your account, you will receive the interest as you like, monthly, quarterly or annually. You can determine the ideal bond for you beginning with a minimum investment of only 1,000 rupees. And the returns you can get are from 9 to 12%. That too in bonds with a strong credit rating. And do you know what the best part is? The entire investment process is absolutely seamless. Whether it's UPI or net banking, it is completed in just a few minutes, 100% online. You also get a simple dashboard to easily keep track of all your investments. You can also see the repayment schedule and even reinvest automatically. Every bond issuer undergoes quarterly audits and full due diligence is done because they do not just list any company's bonds on the platform. These bonds are listed on the exchange and for any midterm needs, you also get liquidity. You can sell them directly on their platform. I've also put the app link in the description. Do check it out. Now let us discuss the financial asset that India's most successful investors utilize for themselves. This is precisely the system that lets you start with really small amounts and after 20 to 25 years, you're a millionaire. Using that corpus, you can effortlessly generate a monthly passive income of up to 1 lakh rupees. I'm talking here about SIP plus SWP, but with a twist. See, many people do SIPs expecting to build a solid corpus in 10 to 15 years. But smart investors actually use another concept called step-up SIP, which is where every year you keep increasing your SIP amount by 10 or 15%. Let us examine the calculation now. If you invest 5,000 rupees monthly without any step-up and assuming a 12% CAGR return, After 20 years, you will have a corpus of about 49 lakh rupees. However, if you start with the same 5,000 and choose to step it up by 10% every year, you will reach 20 years with a corpus of 1 crore 16 lakhs. This means with a small step-up strategy, your final corpus amount can more than double. Now the question is, which fund to invest in? Nippon India Small Cap Fund has delivered a CAGR of 21 to 23% over last 10 to 15 years. Parag Parikh Flexi Cap Fund has also given a CAGR of 21% in the last 5 years. HDFC Flexi Cap Fund delivered a CAGR of 24.26% in the last few years. These funds with their consistent performance are helpful in the creation of wealth in the long term. But the story doesn't end here. When your corpus is built, then comes the second part of the game, that is SWP, which means Systematic Withdrawal Plan. In this, from your corpus, you withdraw a fixed amount every month while the remaining balance of money stays invested and keeps growing. Let's look at a real example. DSP Mutual Fund data shows if an investor put 1 crore rupees in 2001 and had withdrawn exactly 1 lakh rupees every month, then by 2025, they would have withdrawn about 2 crore 90 lakh rupees and their actual portfolio value would hit 7 crore 35 lakh. Meaning, even after withdrawing 3 crore, the portfolio would grow 7 times. This is the real formula for wealth creation. Build a corpus of crores with SIP, plus generate passive income with SWP. The risk rating is moderate with expected CAGR returns of 12 to 15% over the long term. You can start investing from just 500 rupees monthly. Starting an SIP is quite straightforward and simple. Complete your KYC using the link in the description and a list of top performing funds will appear right before you. Select the best fund, enter the SIP amount, select the date, accept the mandate, and your SIP will start. Next is option selling. High risk, high reward. Many claim they can easily make 2 to 5% every month through option selling strategies. But first, look at this shocking data. SEBI had actually released a comprehensive study in September 2024. The study shows that between fiscal years 22 and 24, 93% of individual F&O traders had actually made a loss. 93%. And the average loss was 2 lakh rupees per person over 3 years. Total aggressive losses were about 1.8 lakh crore rupees. That exceeds many nations' GDP. Surely you can profit from option selling? Yes, you can make money, but for that you must have a proper strategy and plan. Like the vampire strategy. This particular strategy can help you make a profit of 4 to 5,000 from the market every week through option selling. That too with limited risk. I have explained this entire strategy in detail in this video. I have put the link in the description. So be sure to check it out after this video ends. But remember, the risk involved here is high and you should have basic knowledge of options trading. Next is algo trading. The illusion of automation. After options trading comes algo trading. Platforms like TradeTron, ZeroTheStreak, and AlgoBulls maintain that you can generate quite consistent returns with automated trading strategies. But do you know the real truth? Look at TradeTron's pricing. Plans are available from a free plan to 9,000 rupees per month. ZeroTheStreak cost from 690 to 1400 rupees. Now if algo trading was so profitable, why would these platforms be so cheap? Think about it. If you could earn a regular income by paying 1400 rupees, then everyone would do it. SEBI actually issued new algo trading regulations in January 2025. As per analysis of Motilal Oswal and AlgoBulls, now even retail investors' algos will have to get approval from the exchange. In your case, if your algo places more than 10 orders per second, registration becomes completely mandatory and these algo rules are getting stricter, and more importantly, the backtesting of algo trading looks profitable, but in the live market, due to slippages, changing market conditions, and unexpected events, the final results can be completely different. The realistic assessment is that algo trading is really only for those people who know proper coding, have a very deep understanding of the market, and are fully capable of continuous monitoring. This is not a risk-free passive income at all. I will make a detailed video on this, so subscribe to the channel or you will miss that video. Next is the Post Office Monthly Income Scheme with a government guarantee and growth. Very few people are actually aware about the fact that the Post Office runs a scheme in which you get a fixed income every month. Plus it is government guaranteed. Its name is the Post Office Monthly Income Scheme or POMIS. In this scheme, the interest rate is 7.4% annually. This rate is reviewed every quarter by the Finance Ministry. And this same rate was active in January 2025. Let's calculate. If you decide to invest a maximum of 9 lakh rupees in a single account, you will get 5,550 rupees every month. If a husband and wife decide to open a joint account, you can invest up to 15 lakh. That yields a monthly income of 9,250 rupees. This monthly income will be deposited into your bank account and it is fixed, guaranteed and without any risk. So its risk rating is very low indeed because there is a sovereign guarantee here. This means a government guarantee with expected returns of around 7.4% per year. The minimum investment starts from 1,000 rupees. Please go to your nearest post office location and open an account. Next is the Senior Citizen Savings Scheme. It offers the safest returns. If there is someone in your house who is above 60 years of age, be it parents or grandparents, then this is the best income option for them in India. And this is a fixed income option, the Senior Citizen Savings Scheme or SCSS. The scheme pays 8.2% interest per annum, which is the highest among all government-backed schemes. Here the income is received quarterly, meaning you get income 4 times a year. Let's see the numbers. The maximum investment limit is 30 lakh. If someone invests 30 lakh rupees, they get 61,500 rupees quarterly. So basically every 3 months, 61,500 rupees get credited to your account. That's 20,500 monthly. To compare, bank FDs are offering a maximum of 7% interest to senior citizens, whereas SCSS is giving you 8.2%. Plus, there's a government guarantee. For eligibility, your age should be more than 60 years, and if you are a retired government employee, an age of 55 years will also work. It yields 8.2% annually while holding the lowest possible risk rating. The last is the National Savings Certificate, where you get guaranteed returns along with tax savings. This is another powerful scheme of the post office that very few people know about. The interest rate is 7.7% per annum, compounded annually. And amazingly, this comes under Section 80C. This means you will get a tax deduction on investments up to 1,50,000. The clear tax calculators show if you invest 1 lakh rupees in NSC, then after 5 years on maturity, you will get 1,48,000 rupees. And the interesting thing is that the interest that accrues every year is also deductible under Section 80C because it is simply considered reinvested. This is especially useful for those individuals who are looking to both save the taxes and also want a safe investment. The risk is very low here because you get a sovereign guarantee. It yields an expected 7.7% annually, but it is totally tax-free. Creating passive income is not an overnight magic trick. It is a systematic process that requires patience, discipline, and most importantly, possessing the right knowledge. Every single piece of data I have given in this video is verified. It is with sources, but before making a final investment decision, do your own research. By the way, you'll find links to all sources and detailed videos in the description. You can check out detailed videos on any topic, but remember, markets do keep on changing. Rates can change and regulations can also change. And from the links that are given in the description, rates and InvIT and mutual fund SIP are best options to start with. In the long run, these options can give you some great returns. For more detailed information, I have added all the links to all these videos in the description. So do check them out once. And always remember one thing. Rich people don't end up becoming rich just because they have more money. Rich people truly become wealthy simply because they put their money to work for them. From today, you can do this too. If you found this video helpful, then like it, share it with friends of yours who seek financial freedom, and subscribe to the channel because you will keep getting such valuable content. See you in our next video where we will decode more interesting wealth creation strategies. And yes, if you want to earn a return of 9 to 12% per annum by investing in senior secured bonds, then I have put the Vint Wealth link in the description. Do check it out. Jai Hind.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.